Welcome to Stock Talk. Definitely hit subscribe if you haven't already. Share it around if you find it useful. And, like always helps us out. Let's jump right in. Yesterday was, well, a pretty significant downturn on Wall Street.
Yeah, quite a slump.
The Dow Jones Industrial Average, it dropped a hefty 817 points. And the S&P 500, the NASDAQ, both down around 1.5%.
So pretty broad-based selling.
Exactly. And the main driver seems to be this surge in the 30-year Treasury yield. It hit 5.09%.
Right, that's the highest it's been since, what, October 2023?
That's the one. And the underlying worry, it seems, is investors getting nervous that President Trump's proposed tax bill could inflate the U.S. deficit.
That yield jump is really interesting. It's not just a number, right? It reflects what investors are demanding to hold government debt for, well, 3 decades. A spike like that, it often signals worries about inflation down the road or, about the government's debt management.
And those worries spread, don't they?
Oh, absolutely. It ripples through everything. Higher yields can make bonds look more attractive compared to stocks, so you might see people shifting money around.
Definitely something to watch. And speaking of where money's going, the tech world is, as usual, buzzing.
Always something happening there.
The huge one is OpenAI. They're acquiring IO for $6.5 billion.
Wow. $6.5 billion for Jony Ive's AI hardware startup. That is a massive bet.
It really is, co-founded by the former Apple design chief.
Yeah, it signals OpenAI really wants to integrate vertically, right? Move beyond just the AI software to the actual devices.
Makes sense.
And IO focuses specifically on AI hardware. They're bringing about, 55 employees over to OpenAI?
Around that, yeah. A good chunk of talent.
It's a big injection of design and engineering know-how. And their goal, launching a screenless, pocket-sized AI device by late 2026, that's ambitious.
Very ambitious. Screenless, pocket-sized. Sounds futuristic.
It suggests they think the next wave of AI interaction is going to be way more integrated into just, daily life. Less screen time, maybe.
Could be. And to build that future, you need the best people. Which brings us to this intense competition for AI researchers.
Oh, yeah, the AI talent war is heating up.
Reports are saying OpenAI, Google, xAI, they're offering top researchers over $10 million a year.
And retention bonuses up to $20 million on top of that.
It's incredible money.
It really shows how much value these companies see in advanced AI breakthroughs. They're basically in an arms race for the smartest minds. They know a few key people could drive the next big thing. But it does make you wonder, right? Is this sustainable, all this spending?
Good question. Will it lead to just a few companies hoarding all the talent?
Potentially. Or maybe a bubble. We'll see.
Okay, another tech giant, Nvidia, CEO Jensen Huang is sounding a warning about U.S. chip export restrictions on China.
Right. This has been a point of friction for a while.
He's saying their market share in China has plummeted from 95% down to about 50%.
That is a massive drop, from near total dominance to half the market.
And Huang's cautioning that these restrictions, well, they might actually end up strengthening Chinese competitors.
Yeah, that's the fascinating part, isn't it? The potential unintended consequence. You try to limit access to tech, but sometimes that just pushes domestic development harder and faster.
History suggests that can happen.
Exactly. So Huang's worried they might be inadvertently creating stronger long-term rivals in a really crucial market.
Okay, let's shift over to financials. TD Bank reported a strong Q2, earnings of $8.03 billion.
What's good on the surface?
But, and it's a big but, a huge chunk of that, $6.18 billion, came from selling their stake in Charles Schwab.
Ah, the one-time gain. So important to look past that headline number.
Definitely. It bolsters the bottom line for sure, but it's not core operating profit.
And TD themselves flagged some macro uncertainty, right, due to rising tariffs.
They did. So they see potential headwinds for their actual banking business.
Which raises the key question for investors. Can they keep up this kind of profitability without those one-off sales, especially if those macro pressures build?
Something to watch. Now, speaking of assets seeing significant gains, Bitcoin.
Oh, boy. Bitcoin's been on a tear.
It hit an all-time high, $111,886.
Incredible. And that's up, what, over 50% just since April?
Just since April, yeah. What is driving this unbelievable momentum?
Well, it seems like a confluence of things, really. Some reports suggest easing U.S.-China tensions might be lowering overall market risk perception, which can help riskier assets.
Okay.
Then there's the weaker U.S. dollar. That can make dollar-priced assets like Bitcoin more attractive to international buyers.
Makes sense.
And even maybe the recent U.S. credit rating downgrade plays a part. Some investors might see Bitcoin as, an alternative hedge against perceived instability in traditional government debt.
So several macro factors lining up.
Yeah, kind of a perfect storm creating a tailwind for Bitcoin right now.
Interesting stuff. Okay, other corporate news. Honeywell is making a strategic move, buying Johnson Matthey's Catalyst division.
For $2.4 billion.
Right. And the rationale is pretty clear.
Yeah.
Expand Honeywell's portfolio in sustainable fuels.
That makes a lot of strategic sense. With the global push towards cleaner energy, sustainable fuels are a big growth area.
Definitely.
Acquiring that Catalyst division gives Honeywell key tech and expertise, positions them well for that long-term trend.
And the market seems to agree. Johnson Matthey shares jumped 33% on the news.
That's a strong positive reaction. Shows investors see the value and the growth potential there.
We're also seeing a big leadership change coming at Rio Tinto. CEO Jacob Stossel is stepping down later this year.
Interesting timing.
Especially given the company's been investing more and more in lithium, right? Which is crucial for EV batteries.
Exactly. That transition at the top likely reflects just how important those lithium investments are strategically. Maybe a new CEO brings a specific focus needed for navigating that rapidly growing, complex lithium market.
Keeps Rio Tinto competitive in the energy transition game.
That would be the idea.
Healthcare costs, always a big topic. Cigna announced a deal with Eli Lilly and Novo Nordisk.
On the weight loss drugs. Wegovy and Zepbound.
That's right. They're capping monthly copays at $200.
That's significant for patients.
And potentially for employers, too. Cigna projects it could cut plan costs by up to 20%.
That's a big potential saving. It's an interesting move to manage rising drug spending. Capping copays might improve access and, adherence for patients.
Which could lead to better health outcomes long term.
Right, and maybe lower overall costs for employers by tackling some of the long-term health issues linked to obesity. It's a proactive approach.
On the vaccine front, though, a bit of a setback for Moderna.
What happened there?
They withdrew their application for a combined COVID-flu vaccine.
Oh, okay. Why?
Said they need to wait for results from large-scale trials.
Okay, so waiting on more data.
Yeah, but the market didn't love it. Moderna shares fell nearly 8%.
Yeah, that reaction highlights the high stakes in pharma development, especially for something like a combo vaccine that everyone's hoping for. Withdrawing suggests the initial data maybe wasn't quite strong enough yet. Shows how rigorous the process is.
True. Okay, turning to legal stuff in tech. A judge approved a collective age bias lawsuit against Workday.
Age bias.
How? The lawsuit claims their AI hiring tools discriminated against older applicants.
That's a serious allegation. Using AI in hiring is becoming common, but the bias issue is a real concern.
Workday denies any wrongdoing, of course.
Oh, naturally. But this case is definitely one to watch. It really underscores the scrutiny AI faces in critical areas like hiring. Even sophisticated algorithms can pick up unintended biases.
Could have big implications for HR tech.
Absolutely.
On a brighter tech note, the fitness app Strava raised new funding.
Oh, yeah. Doing well.
Seems like it. Valuation is now $2.2 billion. Strong number.
Very strong. Who led the round?
Sequoia Capital.
Sequoia. That's a big vote of confidence.
Definitely. And Strava also just acquired a cycling app called The Breakaway.
Okay, so expanding their offering. It points to that connected fitness market still growing, evolving. Sequoia's investment suggests they believe Strava can really monetize its big user base and tap into that digital fitness community trend.
Makes sense. Acquiring The Breakaway probably deepens their appeal to cyclists specifically.
Solidifies their position there, yeah.
Okay, let's pivot to apparel and retail. Nike's planning a price increase.
Oh, all right.
Select shoes and apparel. Starting June 1st. They're calling it seasonal planning.
Seasonal planning. Could also be inflation or just strong demand allowing them to raise prices.
Could be. Also, big strategy shift. Nike's going back to selling directly on Amazon.
Oh, wow. After pulling off 6 years ago.
Exactly. They're resuming direct sales. That's a pretty notable U-turn.
It really is. It likely reflects just how dominant Amazon still is in e-commerce. Maybe they decided they just need to be there to reach enough customers despite whatever reasons they had for leaving before.
The reach is undeniable. Elsewhere in apparel, Canada Goose had some good news.
Yeah, how'd they do?
Shares jumped 20% after their Q4 earnings beat expectations. Revenue was $277.1 million. EPS 0.24 cents.
Nice beat. 20% jump is strong.
But there's some uncertainty. They withdrew their financial year 2026 guidance.
Okay. Bold future guidance.
Yeah, though they did say they expect minimal impact from tariffs.
So, strong recent performance, but pulling guidance injects some caution, doesn't it? Expecting minimal tariff impact is good, given the trade climate, but the lack of a longer-term outlook might suggest they're a bit unsure about market conditions ahead.
Creates a bit of a mixed picture there. And finally in retail, Walmart. They're doing some restructuring.
Layoffs.
Yeah, laying off 1,500 corporate employees in the U.S. Part of a restructuring effort, they say, is for efficiency.
Right. Not unusual for a giant retailer like Walmart. They constantly tweak operations to adapt to, how people shop and what competitors are doing. Focusing on efficiency often means streamlining, maybe shifting resources to e-commerce or supply chain tech.
Adapting to the times. Okay, let's glance at broader economic indicators, some positive signs on the labor front.
Oh, yeah. Jobless claims.
Initial U.S. jobless claims fell slightly, down 2,000 to 227,000 for the week ending May 17th.
Okay, a small drop. Still pretty low historically.
But the 4-week average ticked up just a bit to 231,500.
So a bit of a mixed signal there. The weekly drop is encouraging, suggests short-term strength. But the average creeping up might hint at a subtle shift in the slightly longer trend.
Need to watch the trend, not just 1 week.
Exactly. Labor data can bounce around week to week.
Right. Now, we mentioned TD Bank, but a few other earnings reports came out too. Analog Devices, ADI.
How'd they do?
Strong results. Revenue $2.64 billion, up over 22% year over year. EPS 1.85 cents, up over 32%. Both beat expectations.
Wow, solid growth there for ADI. Good demand for their chips, it seems.
Then Snowflake, SNOWO, also impressive. Revenue $1.04 billion, up almost 26%. EPS 0.24 cent, also beating forecasts.
Another strong showing points to that cloud data analytics space still expanding rapidly.
And lastly, Zoom Video, ZM, revenue $1.17 billion, up just under 3%. EPS $1.43 cents, also above expectations.
So more modest growth for Zoom, but still beating on earnings. Shows their platform's still relevant even if the hyper-growth phase is over.
Overall, a pretty positive earnings snapshot from those three.
Yeah, it indicates robust demand in certain pockets of the economy, despite those broader market jitters we talked about earlier.
Good point. Okay, finally, let's quickly cover the IPO watch for this week. Some activity happening.
Always interesting to see what's coming to market.
Confirmed today, Hinge Health, HNGE, MNTN, Inc., MNTN, and Oyster Enterprises 2 Acquisition Corp., OWAY SE.
Okay, Hinge Health and MNTN are traditional IPOs. Oyster Enterprises is a SPAC, right?
Exactly, a special purpose acquisition company. This one's targeting media, AI, sports, and tech sectors. Basically raises money to find a private company to merge with and take public.
Got it. The SPAC right.
And expected on Friday, May 23rd. Fast Track Group, FTRK, it's a Singaporean entertainment firm, saw huge revenue growth year over year, though from a small base.
Interesting.
And another SPAC, Pelican Acquisition Corp., PELI, focused on global tech investments.
So a mix of traditional IPOs and SPACs again this week suggests there's still an appetite for new public companies.
Across different sectors, too.
Yeah, the range from health tech like Hinge to media AI targets for the SPACs shows companies are still tapping public markets for growth capital. And it's good to see both pathways, traditional IPO and SPAC, being used.
Definitely. So wrapping things up, yesterday's market drop clearly linked to those rising Treasury yield concerns.
Driven by deficit worries, yeah.
We also saw huge news in AI with that OpenAI acquisition.
Massive deal. And the talent war continues.
A mixed bag on earnings overall, some strong beats, some caution flags.
And still decent activity in the ITO market.
It really paints a picture of how interconnected everything is, doesn't it? Macro worries, sector-specific news, company strategies.
Precisely. You really have to understand how these different pieces fit together, the big picture economic forces, the individual company moves to get a handle on the current financial landscape.
Absolutely. So on that note, here's a final thought for you, the listener, to chew on. We're seeing Treasury yield surge, right? That's usually seen as a flight to safety, traditional assets. But at the same time, we see Bitcoin, a much more speculative, alternative asset, also surging to record highs.
Yeah, it's a fascinating contrast.
So what could this simultaneous surge in both traditional yield and alternative assets tell us about how investors are maybe evolving their thinking about risk, how they're perceiving and managing it, especially with potential shifts in fiscal policy and the whole economic outlook.
Good question to ponder. A sign of changing times, perhaps.
Perhaps indeed something to think about. Thanks everyone for tuning into this deep dive into the day's financial news.